I just found one of the perfect, if not, almost perfect setup for swing trading if you are into that. Now, this company is not your blue chip stock. It's not, a stock that you would normally just find. Okay. This stock just crossed right above the EMA, which is one of the number one indicators that I use for swing trading and most other successful traders, especially if you've been a professional trader before. Another thing is price volume, or volume in general, is a little unusual. And you can see that above this moving average, this volume moving average. So like I have a price moving average, I have a volume moving average. Welcome back, everybody. Welcome back to YMC. Appreciate everybody joining and really showing support. If you haven't already did, like, share, subscribe to the channel, and continue to get some of these videos from a pro trader of over a decade. Now, back to volume, right? I found these volume spikes along with this price crossing above the EMA, which indicates to me that this company has potential to actually make what we call a momentum move. There's a lot of buyers, and this is how we indicate party volume, right? Look at it as a kind of a DJ booth, and you kind of measure the volume or the EQ of the sound. Same thing here. If this green bar passes above this gold line, which is the volume average over 20 days, it lets me know it's unusual and there's a movement waiting to happen. Now, does it happen all the time? No. But for a majority of the time, it does. And this is why I use this indication. And this is how I can time my trades like nobody else. A lot of traders don't know when to time their trade or their entry. And I'm going to show you right now. So, like I said, I found this on my scanner, put it up, said, hey, man, look, I noticed this. I usually start with the daily chart to look at kind of the long-term trend of this company. And, we're down like right by, yearly lows. If you can see right here, there is lows and we're pretty much right back where we were in 2020. And you see what happened back in 2020, where it was by these lows. And then you look at the short term of these years, and you can see how it had a long-term trend because it trended up for over a year. Okay. I like that. I like to find stocks that present that. I like to find stocks that can show me those patterns where it's doing the same thing over and over, because it becomes what we call predictable. Not saying we're predicting the market 100%, but we are saying that it has a high probability. It's like Mike Tyson fighting somebody who's an amateur. The probability of that amateur being Mike Tyson is super low. The probability of Mike Tyson winning that fight is super high. So we will probably bet with Mike Tyson. Same thing here. So looking at this long-term trend, we see that it's by this yearly low way back in 2020 when we had the pandemic. And we noticed this year, even in the overall markets, the market is continuing to trend up. I'll show you a quick index that I like to highlight. And that is the IWM, the Russell. This is like all small cap stocks bunched into one, just like the S&P. So when we look at, these companies, small cap companies, or we may look at, mid cap, we want to see the overall trend of the market. It seems like things are bottoming out. We're not really we're starting to trend upward. and you can see it right here. We have this uptrend, and you notice that there's some pressure being created in the market because we have a slight, I would say, a pennant pattern right here. If you don't know what a pennant pattern is, look it up. Look it up. So let's look at this for a moment and say, all right, if there's a slight uptrend, the Russell is trending above. You look at the SPY or the SPY, and that's trending up. We're about to make some new highs. The Qs, we're doing the same thing. Why not bet on this company, right? Because usually stocks move with the market, and the market is looking really primed. We've seen the bottom, and now we're about to make some new highs. Capital it's about to be more distributed. Interest rates are not continuing to hike crazy like they were all year of 2022. And, it is giving me more of a probability that this company on the short term can make a move. And after a while, like the stock has been just going down, right? If you look past like the multiple month, back in March, you see that the stock has been going down, down, down. But we notice that when the stock does cross above this blue line, you have spikes. You have really big spikes. Even when it bounces off this line, you have spikes. Last time it did it, we had a spike right here. So that's a pattern that I'm recognizing just by looking at this chart, looking at these crazy candlesticks that a lot of people don't know how to analyze. I'm really showing you how now that we have identified these patterns. So this is giving me the probability that it can shoot up, and it probably can shoot up past or close to this last point of pivot, or what we call a peak. So when I look at this peak, right, let me get my tools, and this has been a little buggy. I'm not sure what's going on, but let me use this tool right here. So we have this last peak when it crossed above the EMA and it spiked. We have the same situation here. So we say, all right, stocks can usually retest their previous highs, especially if it's trying to build an uptrend, or it can get pretty close. So I always like to measure between where the stock is today in price compared to where it could possibly go without it having super, super heavy resistance. The reason I do that is because I'm trying to take a chunk out of this potential, right? This is what we're betting on. We're betting the stock will go up, and we're bullish. That's what bullish means. You're betting that the stock market or the stock that you're looking at is going to go up. We're not bearish. So it's showing that there's a potential 32% return. Usually on my swings, I usually go, if it's a large account, if I'm betting a lot, I'll probably go for 5%, 10%. If I'm not betting a lot and it still has a lot of potential upside, right? This is where we're measuring the upside. Then I'm like, maybe I'll go for 20%. I don't want to go for the full gusto. I'm not going for the home run. Home runs do happen, but I'm not going for that. I'm going for something really simple, something that's attainable, and something that will grow my account a lot faster than a 401k. So, I measure that, and I'm like, let me move this out the way. I measure that, and I'm like, okay, now I can build kind of, where's my entry, right? Where's my stop loss? And where is my price target, meaning where I'm going to sell my shares for a profit. So I have this tool called the long position, right? Where I can say, all right, I'm going to buy some shares today. It's 149 right now. And I say, all right, I'll buy some shares. So it's automatically going to like set it up to where, it's giving me a ratio of 1 probability, meaning that, I'm basically 2 to 1 right now. Or I'm basically like 50. And you usually want to stay above 50 because in order for your portfolio to grow over time, you kind of need some type of wiggle room. You also need to set up the stop protection to keep your account from blowing up or you losing all your money. So this is what we see in red is what we're willing to lose percentage wise on the account and our stop loss protection. This is one of the things that 95% of traders don't do is they do not set their risk management. So we're going to set that first. And how we kind of set this on this type of trade, if it's been on a downtrend, it seems like it wants to go up, it crossed above the EMA. I'm usually going to try to set it like right here, or sometimes even if we're wanting to have a tight risk management. See, that's 21%. That means we would have to gain at least 21%, and we do have some wiggle room, right? But sometimes even I will set it to where we have our support. We have kind of a yearly support, and I will probably set it like right below it, or the previous day, which I will have to go back to a daily chart up here. I will set my stop loss at the previous day low. So that's right here. This is today. And then this is the previous day. And this is the low of the day. That's where you see the wicks. I would set it right there. And that gives this more wiggle room for the stock to do what it does. Because if I buy, sometimes these stocks, they'll go down a little bit. They'll bleed. But then they'll go right back up. So, you don't want to get prematurely stopped out. Meaning that you bet it on the stock and then you got prematurely stopped out like right here. And let's say 2-3 days later, that thing shoots up, hits your goal. You're going to be pissed. I promise you're going to be pissed off because you were right, but you didn't set up your protection right. You didn't set up your entries and your exits right. So we give it a little wiggle room. Sometimes people do the low of the day. You can do it like right there. And you're only risking 9% of your trade. And so we're probably going to do the low of today, simply because this thing has downtrended just a little bit over time, or a lot of it, but it looks like it's trying to make a turnaround. And then we're probably going to shoot for maybe 20%. So we have a ratio of 2.0, which is good. Like I said, as long as it's above 1%, that's okay. Like, as long as it's like the rate 1, that's 50-50. With 2, you're making basically 2 times your bet. So you're having a calculated risk, but if you're right, you win 2 times more than, you basically are setting a reward where it's in your favor, times 2, rather than you losing. If you lose 9%, that's okay, because when you start making more wins, your wins need to outweigh your loss. So that's how I set it up. You can set it up any way you want. This is how I've been doing it for years. It's worked in my favor. Sometimes I even I'll buy my stock. I'll set the risk management, but I won't necessarily have a hard target, where I don't put in an order to get me out at a certain price, because that's what we're doing. We basically can say, all right, I'm going to create a limit order, and it's going to create an order for you to buy the stock, to sell it at the top or sell it at the bottom if you are wrong. Sometimes I just buy it. I set my risk management, my stop loss, and then from there, I just watch it. Sometimes I set a trailing stop, where the stop loss will trail as it continues to go up. That way, if it drops down, you can kind of take your profits. You don't lose completely out. Let's say you don't have a trailing stop. If this thing goes all the way up and then a month later it drops all the way down and stops you out. Well, you could have potentially just took some profits up here, as you've seen it falling right back down. But usually I do that sometimes if I'm looking to swing for like 4 weeks. But usually when I'm swinging, I'm looking at, 1 or 2 weeks holding time. I'm looking for momentum that can push past. And last time this did it, it went up. It took only 3 days to get to this point. Now it fell out right back down. So this lets me know, like, around this area is potentially where there wasn't a lot of demand. And so it dropped back down. Now it's going back up. And I believe it can go back up to this point. It can at least get right here. So my ratio is 2.0 or 2.02. You don't have to be perfect on this, but it's not going to get that perfect, but 19%, I can take that. That's good. You do the math on that, how much you're willing to risk. Usually when I'm taking a position, I'm not betting. If I have a small account, under 25,000, then, I'm a little bit more aggressive. So I will make, a bet. I'll use 50, 60, 70% of my account to grow it. If I have a larger account, 25 and above, I'm like, all right, I'll use 10% of my account equity. So if I got let's say I have $50,000 and then 10% of that is 5,000, I will use 5,000 on the trade to say, all right, I'm risking only 10% of my account. Because if I lose that, let's say I lose, the 9% or the 10% on my account, I'm losing $500. Now, if you do 500, divided by, if you do 500 divided by 50,000, then you kind of get, the percentage of what you're risking for your whole account. And so I like to stay below 2% of my whole account. I don't want to risk losing more than 2% on one single trade of my total account equity. So, like I said, $50,000, if you're trading with that type of account, then 2% of that is 1,000. So I don't want to lose 1,000 on one single trade. Like, that's not going to grow your portfolio. Now, let's be realistic. Most retail traders have an account of 5,000, 10,000. Sometimes you will get a bunch of retail traders who, only have $1,000, $2,000. So let's be realistic. Let's say 5,000, $5,000 is, 2% of that is only $100. So you don't want to lose $100 on one single trade. So that means you should not be risking that much. You should not be risking 100%. So if I got a $5,000 account, I probably would risk 50% of it on one single trade. So I will probably trade with 2,500 or 3,000 if I'm a little bit more. If I can see that this has a higher probability and all the checks and balances are there, I will probably risk more. If I'm like unsure, I don't know the industry well, I haven't seen this pattern before, but it looks promising. I'm just not totally I'm not really bought all the way, but it's a good opportunity. I don't want to miss it. Then I would probably just go with 50% of my account. And even sometimes I'll go 30% of my account. That way I can make sure I don't lose more than 2% when I'm risking that type of capital. And that's how I kind of do it to make sure that I'm all in line. And I can grow my portfolio over time. You want to do that as well too. You don't want to grow too fast. Well, you want to grow fast, but you don't want to risk your whole account just to grow fast. That's what I'm trying to say. You want to be strategic about it. You want to have a plan in place. And that's all the things that I'm telling you about this trade. And so that's what I would do. This is the trade I will make. And then I will get back with you in a few days later to see how it turns out. You guys, like I said, if you guys want to keep getting these analysis and things like that, I know that analysis and TA and fundamental analysis and social arbitrage is not the most entertaining thing. You guys would like to see me in my cars and me driving my Audi and me living in a place where it's like, oh my God, or me traveling if you follow me on Instagram. Like that's all nice, but here's the real stuff that goes on behind the scenes. And so if you want to keep getting this TA, you like, share, subscribe, man. Share this with a friend or anybody that is also trading and you guys need, some assistance, from somebody who's been doing it for a decade, who's grown a $5,000 account to $100,000 in 8 months, from somebody who's grown a portfolio almost crossing the million. So you stay tuned, and I appreciate you guys' support. All right. Peace.